Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 20th of Feb 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. Not too much action over the last 24 hours in the world's foreign exchange markets. You'll remember that it's Chinese New Year, an ongoing holiday there, and that yesterday was President's Day, a holiday in the USA. So you had a relatively narrow band of moves amongst the FX majors yesterday. The dollar, as expressed by dollar index, slightly better, up at 89.40. Modest gains for the dollar against the euro and the British pound then. And turning to the world of cryptocurrencies, Bitcoin has enjoyed further gains and is putting together an impressive weekly rally, up now by some 34.29% just before we recorded the video, as measured over the last 7 days. Right, what's on the calendar then? Events that may move the markets today. Again, quite a compact calendar, plenty for us to get our teeth into. European economic and finance ministers are still meeting as the Euro group. That's ongoing today. We've also had minutes from the Reserve Bank of Australia this morning, and we'll come on to that in a bit more detail momentarily. At 7 a.m. this morning, we'll have producer price index data out of Germany for the month of January. This is factory gate inflation, and of course this data will feed into expectations about the euro and possible ECB moves on rates and monetary policy normalisation. Then at 8:15 we'll have industrial production data both year on year and fourth quarter out of Switzerland, and that's followed at 10 a.m. by the influential ZEW survey covering economic sentiment, the current economic situation and the outlook in Germany. And then at the same time we'll see similar data from the ZEW survey for the wider Eurozone, and we jump forward then to 1500 GMT for consumer confidence figures for February out of the Eurozone as well. Right, breaking news and comment then that's caught my eye overnight. Relatively light on the news front in the last 24 hours. However, HSBC, one of the world's largest banks, has posted profits of almost $21 billion for 2017, but has still managed to miss analyst forecasts. So banking analysts obviously a very demanding bunch. Oil prices have edged higher in Asia, as OPEC Secretary General has said that he is optimistic about a market rebalance and future OPEC supply cuts. The Reserve Bank of Australia has admitted that Australian wage growth remains subdued in the minutes of its February meeting. And the Brazilian Economic Activity Index has gained the most in 10 months during the month of January, rising by around 1.41% and posting its fourth month of consecutive gains in a row. Food for thought then, something to take away with you into the trading day. And why not think about this? Despite global growth and rising employment, wage growth remains subdued in many developed economies, and that has kept central bankers cautious on raising interest rates. But the chart opposite shows us one of the reasons for this limited wage growth, and quite simply, corporates are keeping more of the profit pie for themselves. We can see corporate profits here in the turquoise line and employee compensation here in the sky blue line. Worth looking at that chart. The shady grey areas, by the way, represent US recessions, and this is a long-term chart dating all the way back to 1947. The data is taken from the US. Right, risk warning time. Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business, and if you are concerned about the risks or uncertain about the suitability of the products for you, then please do contact your Pepperstone account representative.